There is a perfect storm of factors which have come together to create one of the best money-making periods of the decade. Frankly, I haven't seen something this good in many years, which is making trading and investing globally most appealing. If you approach this the way I'll describe in this video series, you have a strong chance of doing well. There are risks, of course, but if you don't take some risks, then you won't get anywhere in terms of progressing to financial freedom. And the reality is that my process will minimise the risks. Now, there are relatively limited opportunities in Australia at present, so I really encourage you to think and act globally, and also not to procrastinate about getting started. New bull markets are already underway, and the bigger gains are made by getting in near the start. Naturally, that does mean some additional near-term volatility, but if you do your homework as thoroughly as I do, the rewards certainly justify the risk. Now let's have a look at how this process works. You need to consider what type of trader or investor you are, and in particular, what sort of return you want. The world's best traders and investors have been able to exceed 20% per annum over long periods, and there's absolutely no reason why individual investors can't do the same thing. You need to consider what level of risk is right for you, and higher reward does not have to mean higher risk, as you'll see as we go through the series. You need to consider what sort of activity fits your lifestyle. There is absolutely no point in trying to build something that just does not fit with your personal and business life. So you need to be consistent in application. It's absolutely vital. Let's look at how we can spread the risk. There's several things that you can do. The first one is to go where the momentum is. There's always a bull market starting somewhere, and most people want to stay with what is familiar with them and what's comfortable. And markets change, so you've got to go where the momentum is. The next thing you can do is to diversify within those high growth sectors. And what we're looking at doing here is buying great businesses. We're not just buying stocks. We are buying great businesses that are going to continue to grow in value over time, and the share prices will follow. And ideally develop a large spread so that you are minimising the risk in any individual stock that you buy. The next thing that you can do is to be aware of the big picture drivers, and that is market sentiment and money flows. There's no point in being right about a particular stock if the markets globally are just going into a downturn. So you do need to be aware of the bigger picture drivers, and that's something that I spend a lot of time with. So you need to trade with what is happening now and not what you think should be happening. You can work with the natural cycles of the market and buy when the selling is done. Even stocks that are in uptrend have periodic times when they're sold down, and that's the time to buy, not after the stock has just run up in price. So in other words, buying the dips in a strong uptrend is the way to go. Now the major momentum sectors that are available overseas, and particularly in America, surround the shale oil and gas revolution. And energy is the major driver of wealth. America is set to absolutely impact the energy world with the developments that are happening there. The next major momentum sector is in digital technology, and there are just staggering changes occurring in technology, and it's massively changing the way that we live our lives. The profits for the innovators will be absolutely amazing, and profits for early investors will also be very, very solid. Let's have a look at shale oil and gas initially. Now, energy is the greatest driver of wealth, and America's energy supply chain is poised to really cash in. The key opportunity areas are the upstream producers of oil and gas, the infrastructure builders to transport that energy to market, the service companies, and also the about-to-be energy exporters. America hasn't been a significant energy exporter for a long time, and that's all about to change. And that's going to change the fortunes of a lot of companies. Now, there have been companies in this sector that have already gone up by 200 to 400% in the last 18 months. But many are just getting started. The opportunities are amazing. Now, the fundamentals will support us. The key is to buy great companies, not just buy a stock that you get a tip on. Critical to do your homework and buy great stocks that are growing their earnings. So there is absolutely no need to take high risks. This is just sensible investing. And you just work with the natural cycles of the market to buy the dips, as I indicated earlier. Let's look at an example. Trinity Industries is a company that manufactures rail cars and barges to transport oil. They also are involved in highway construction products, wind turbine towers, and they also lease equipment to the energy transport industry. Now, you've probably never heard of them, but they've got a market capitalisation of $6.5 billion, which would put them in the top 20 or 30 stocks in Australia in terms of market size. The financials are impressive. They've grown their profits at 56% per annum over the last 5 years, and despite a very significant price rise, as we'll see, they're still trading on a very, very attractive current price earnings multiple of only 11. That really is cheap, and it's almost impossible to find that sort of equation in Australia. Companies that have got that sort of earnings growth are trading on PE multiples of 30 or 40 times. Now, the share price has responded to those terrific financial fundamentals, and the share price has gone from $18 to $42 in the last year. Now, just imagine if the impact of the PE expanding to say 16 times from the current level and ongoing profit growth of 25%. Both of those are conservative estimates by the way that markets normally respond to those sort of very strongly growing earnings. If that were to occur, and of course there's no guarantee that it will, but if it were to occur, then we would see the share price up to around $75 over the next year, which is almost another double from where it is currently. Now, there's the price chart over the last year or two, and you can see there's been a dramatic acceleration during 2013 and 2014, and that reflects the terrific fundamentals. Now, over the next decade, as an investor, if you can't get excited by what's coming, then you are not trying, or you are already wealthy and it just doesn't matter to you. The opportunities are just staggering. Now let's have a look at how to maximise your returns. There's several things that you can do. You need to get in early, so I really strongly suggest that you don't procrastinate about this. Contrarian thinking is the way to really cash in and make money, particularly if you do your homework on the fundamentals. By definition, you will never make money investing with the rest of the crowd. It's just not going to happen. The next thing you need to do is focus on a proven formula, and that's what I'll be presenting to you in this series. You don't just buy what is comfortable or what is normally accepted. Now, practically, how do we go about this? Well, the first thing you need to do is to build a plan, a trading or investing plan, and I can assure you, you will absolutely fail without one. Secondly, you need to do some detailed research, and there are no shortcuts to this. It just takes a lot of time, and it's a dynamic process, so it's ongoing. 99% of people have neither the interest, the knowledge, or the time to do the research properly as it needs to be done. So therefore, the vast majority of people should buy that research from someone. The next thing you can do is to get a mentor, because even with the right sort of recommendations, the vast majority of people will find it extremely difficult to consistently apply that information over a long period of time. It's just too hard to apply the research consistently without it. And the question I'd ask you is, why would you try and shortcut the most important financial process of your life? It just makes absolutely no sense. Now, you do need to build confidence in a mentor. That's important. So bear that in mind as you go through that process. Now, the actions that I would suggest that you take are to make a commitment to pursue financial freedom. It can be done. It's a straightforward process. You just have to get organised and get the right resources around you. I can tell you that you can do so much better than what you're probably doing now. Now, in the next video, I'll show you the fundamentals of why this process works. But if you're ready to find out more now, then just get on with it and contact me now. This is my passion. This is what I spend my life doing. And with your help, I can assist many others to achieve financial freedom. So if you've enjoyed this video, please hit the like and share buttons below or leave me a comment or a question. I'd love to hear from you. See you in the next video. Cheers.